Imagine this. You've worked hard, built up your savings, and started investing. But what if all of it could vanish in an instant? A car accident, a sudden illness, or an online scam could threaten everything you've worked for. Protecting your wealth isn't just about growing it, it's about guarding it. In this video, we're diving deep into how to protect your financial future in 2025. So, if you want to make sure you keep what's yours and build even more, keep watching. 2025 is an exciting time, and there's more opportunity than ever to build your wealth. But here's the truth. If you don't protect it, all that hard work can be undone in a blink of an eye. From the unpredictable risks of life to the rising threats in the digital world, you need a strong defense strategy. Wealth isn't just about how much you earn. It's also about how much you keep. Have you ever wondered how some people seem to hold on to their wealth no matter what life throws at them? Well, spoiler alert, they have a plan. And today, I'm going to show you exactly how to build yours. Let's start with the most fundamental way to protect your wealth: insurance. You wouldn't drive a car without insurance, so why would you go through life without protecting your financial well-being? There are three key types of insurance every person in their 20s and 30s needs: life insurance, disability insurance, and health insurance. Life insurance ensures that if something happens to you, your family and loved ones won't bear the financial burden. But here's the twist. Not all life insurance policies are created equal. You don't need to go for an extravagant policy. Term life insurance is often enough for most young professionals. Disability insurance is a game changer. If you're unable to work due to injury or illness, this will cover a percentage of your income, ensuring you don't lose your financial footing. And health insurance, well, with rising medical costs, this is non-negotiable. But here's the question. What's the one thing many people forget to do when it comes to insurance that can ruin everything? Stick with me, because I'm about to tell you. Now, let's talk about your investments. Many young people get excited about the stock market, but here's the truth. Without proper asset allocation, you could be putting your wealth at serious risk. Asset allocation is about dividing your investments across different asset classes: stocks, bonds, real estate, and more, so you're not exposed to unnecessary risk. It's about creating a balance between growth and protection. Here's a simple strategy. If you're younger and have a longer time horizon, you can afford to take more risks with your investments. But that doesn't mean putting all your eggs in one basket. Consider diversifying your portfolio to include some bonds or real estate investments, so you have a safety net in case the stock market tanks. Let me ask you something. Would you put all your savings into one investment, or would you want to spread that risk? The answer is obvious, right? Keep watching, because the next strategy will help you safeguard your wealth in a way you probably haven't considered. Now, let's dive into something that most people don't think about until it's too late: estate planning. Estate planning isn't just for the ultra-wealthy. It's for anyone who wants to ensure their assets are distributed according to their wishes when they're gone. Creating a will is essential. It ensures that your belongings, investments, and savings go to the people you choose. But it doesn't stop there. Consider setting up a trust, which can help you avoid probate and save on taxes. This is especially important if you have family members you want to protect financially. Here's the thing. Estate planning is something that's easy to ignore, but the consequences of putting it off could cost your loved ones significantly. So how can you make sure you're covering all your bases? Let's talk about that. Identity theft and fraud, two words that strike fear into the hearts of many. But here's the truth. In 2025, these threats are growing more sophisticated every day. And if you're not proactive about protecting your personal information, your wealth could be vulnerable. Start by using strong passwords and consider using a password manager to avoid the temptation of reusing passwords. Enable two-factor authentication on all your financial accounts. It's one simple step, but it can save you from a potential disaster. And don't overlook credit monitoring services. A small subscription fee could save you from a huge financial headache if someone tries to steal your identity. Imagine checking your bank account and finding that your entire savings have vanished. It's every person's nightmare, but it's avoidable with just a little effort. Let's get into how to protect your money further. Here's the final piece of the puzzle: regularly reviewing and updating your financial strategy. Life is constantly changing, and so are your financial needs. What worked for you last year might not be enough for the next. That's why it's critical to revisit your financial plan every 6 to 12 months. Are you on track with your savings? Is your insurance coverage still adequate? Are your investments aligned with your risk tolerance and long-term goals? These are questions you need to ask yourself consistently. The more proactive you are, the more secure your wealth will be. But here's the kicker. What's the one thing people often forget when updating their financial strategy that could cost them big time? Stay tuned to find out. Protecting your wealth isn't just about growing it. It's about being smart and prepared. Insurance, asset allocation, estate planning, identity protection, and regular reviews are all part of the strategy to ensure that your hard-earned money is safe. Remember, wealth doesn't just happen. It's a result of careful planning and smart decisions. So, if you're ready to take control of your financial future and protect what's yours, hit that like button, subscribe for more expert tips, and comment below with one thing you're going to do today to start securing your wealth. Don't wait until it's too late. Stay smart, stay wealthy, and let's protect that future together.